Hey everyone, welcome to the KE Report and another daily editorial as we are chatting with Craig Hemke, founder and editor of TF Metals Report. As we always do, we're going to be talking precious metals, and at least to kick off this week, it's a good topic to chat about because there's a lot of green on the screen here, Craig. We have gold up in almost around 2,700. Silver is up right around $1 in the mid $32 range. Even the stocks are doing well. You look at GDX, GDXJ, those are up over 4 and over 5%. And SIL, that's actually dragging a little bit compared to GDX. That's only up about 2.75%. Craig, I do have to ask though, is a lot of this move to kick off this week's geopolitical focused?
Oh, maybe a little bit, just because the uncertainty that continues and grows. And by the way, nice to speak with you boys. I think this particular rally today is primarily driven by news out of China. It began Saturday with the announcement that they'd resume their official gold purchasing. You guys might remember back, there was a day in June where they halted, where, all of a sudden their gold purchases were flat month over month, May into June. And gold fell about $50 that day. This is back when we were about 2,400, 2,450, something like that. So obviously then we rallied after that into October. But nonetheless, it was a negative on that particular day. People wondered if, this was a long-term pause or if they'd resume. Well, anyway, Saturday they announced their latest holdings went up by 6 metric tons. So that was the first thing that was some good news. And prices popped a little bit on the Sunday reopen last evening. But the major news was a formal policy announcement by the People's Bank of China and the Chinese government about their monetary policy for 2025 and beyond being very loose and accommodative. You can see the effect of this on the chart overnight. It was almost just straight up in all commodities, a consistent bid. Beginning at about, maybe midnight Eastern, whatever that is, noon in Shanghai, when this was announced. Commodities across the board having a very nice rally. When I looked this morning earlier, everything on my screen, from gold and silver to crude oil, natural gas to copper to zinc, you go down the list, everything was green. And so that's a very positive for 2025, but it's helping us today. Silver has a very attractive chart. I was writing last week about there's really nothing to prohibit. We just need a spark. And with today's news and silver getting back above its 50-day moving average, at least for now, maybe we've gotten that spark.
Yeah, Craig, it's nice to see silver outperforming gold on a 3-to-1 ratio, which we like to see. It's nice to see it back above 32.50, which was a prior resistance level, then a floor, now resistance again. So nice to see that back above the 50-day moving average. But you mentioned there was nothing really holding it back. And I think you were mentioning to us off mic that when you looked at the CoT reports, the commitment of trader reports, that there was kind of a clean slate for this to happen. Why don't we dive into the CoT report a little bit more?
Well, I'll be happy to do that. It has been an interesting, washout of the speculative positioning in silver over the last 4 or 5 weeks. I just track kind of broad scale positioning in the precious metals, for the speculators, the hedge funds versus the banks and the swap dealers and the commercials and everybody else. It's not that it's completely washed out and there's even positioning on both sides, but we are back to some of the smallest net positions, either broadly based as hedge funds, as large speculators, or more narrowly focused as hedge funds. We're looking at some of the smallest positions, net positions, long in that category since either middle part of June or in some instances, you can go all the way back to early March. Now, back in early March, gold was rallying, but silver had not yet taken off. Silver didn't rally. It really began on Easter Sunday night, March 31st. But it was about 24.50 back then. And so here we are, after this rally to 35, we're back to the same net positioning that we had back when price was 24.50 and ready to move, 30%? So there's nothing from a positioning standpoint that would prohibit a rally. Again, we just need a spark. I like the chart. Typical of, again, they don't all unfold this way, but double tops or double bottoms kind of typically look the same. You get this blow off top, a pullback, and then a second attempt back up that kind of gradually rolls over and rolls back down. That's what a double top often looks like. Conversely, a double bottom looks the same way. A spike low, a bounce, and then kind of a rounded low. Anybody that can pull up a daily chart of silver, you'll see exactly that. I'll give you one more. After we went to 33 and change in May, silver pulled back to about 27.50 and spent a period about 4 days in early August riding its 200-day moving average. It then went to 35. My personal trading target was another trip back that 200-day moving average, and I missed it. We got to within about 10 cents on Wednesday night 2 weeks ago, Wednesday right before the holiday, Thanksgiving holiday. We got to within 10 cents, but I took action last week. Anyway, we kind of accomplished the same thing in a pullback. So a lot of things going for it. We'll see if we can, it's not straight up, sustain a rally now into year end. And if I might throw one last thing on there, I really want people to be aware of and keeping an eye on over the next 3 weeks, and that is the yearly close. We had big rallies in silver in 1979 and 2011. Everybody knows, went up near $50. But the end of those years were both at about the exact same price, and they are a tie for the highest annual close, about $31.25, something like that in spot silver. Both of those years. Right now we're what, 32.50, 33? So that's your level you want to watch. We can get a all-time high annual close by the time we get to New Year's Eve. That will be significant and noteworthy. So keep an eye on that.
So close. We'll see where it ends. But Craig, just back to those CoT reports. One thing that I know some people look for in silver, potential short squeezes. Doesn't sound like those CoT reports are really set up for a big short squeeze, though, does it?
No, and the short squeezes are keys maybe for turning the trend sometimes, kind of intraday rocket fuel, as the late Ted Butler used to call it. What I'm talking about is room for open interest longs to come in, or spec longs to come in. It's such a tiny market. And when I talk about this annual chart and getting more diverse institutional high net worth hedge fund family office buying of silver on a long-term chart, that's what drives it. And that brings more people, more dollars, more interest into silver. You got to get some buyers of the futures contract if you're going to move price. Well, when I talk about that positioning, that net positioning, that's what I mean. The amount of net longs or even the gross longs in silver are back to where they were prior to previous rallies, where all of a sudden you get this rush in of speculative interest. I mean, we're down to, 64,000 gross longs on that CoT report. That thing peaked at 82,000. I mean, we're down 25%. So from the highs 5-6 weeks ago, what I'm talking about is not so much the short squeezing, because those positions are relatively small. It's if that 20,000 contracts of buying interest returns over the next couple of weeks, next couple of months. That's a lot. That's what can propel price back up to 35 and beyond. And that's more of what I'm looking at.
Well, and Craig, like we've mentioned so many times, the gold stocks as well as the silver stocks track the silver price action. It's that speculative animal spirit side of the business. And we do see nice up moves in really everything today. How are you looking at how, if we had an annual close, as you mentioned, that could tie into maybe more people coming in, the bigger funds watching those longer term charts? How would that help not just silver, but also the gold stocks?
Well, yeah, because of that long-term connection. You can see it intraday, you can see it daily. The GDX and the price of COMEX silver are very closely correlated. And that's just an algorithm thing. That's just computers that drive the markets these days. You can see it, like I said, even intraday, as we record this today. A lot of the volume in the futures market dried up after the PM fix at 10 o'clock Eastern. That came coincident with a kind of a rally in the dollar index, not big, but enough that then the computers took over and gold slowly gets washed back and silver gets washed back. It's now about 1% off its highs. And as that's happening, the machines see that and they sell the mining shares. And now they're off their highs too. But if you can get, again, a rally that now persists, get noticeable rally into the end of the year and then start off the new year, then that's going to help the mining shares. The other thing that helps, is I think there are some smart people out there that can kind of do the math and go, wait a second, there are companies like Agnico Eagle that made a ton, I left the expletive off the front, an S ton of cash in the third quarter with gold averaging, whatever, 2,600 to 2,650. And then the price gets, rolled backward with everything else in November. But wait a second, if the price of gold in the fourth quarter is going to be 2,600 to 2,650, a company like that one's probably going to make an S ton of cash again in the fourth quarter. So maybe we ought to do some dip buying. And just using that as an example, AEM has really bounced back from that selling. It's gotten back above its 50-day. It erased what looked like it might be a head and shoulder top on the chart, and it's getting pretty close, getting real close to the all-time highs that it had back in late October. So there's some fundamental stuff going on here too, where I think people are realizing, especially when we get to the end of tax loss selling season, they're looking to change positions for a while. People are realizing there's some fundamentally strong earnings reports that look like they're going to be coming in January.
Well, Craig, unfortunately, the Q3 earnings kind of put a top in the market because everyone focused on Newmont so much. But, Craig, we hear so many positive comments heading into next year, and rightfully so. Look at how well gold did this year. Look at how well silver did this year. A lot of the stocks did well, too. What could get in the way of this really unanimously bullish outlook that we keep hearing?
Well, you remember this was kind of the discussion we had back in October, right? It's like, look, all this stuff looks great, and gold's at 2,800, and what's going to stop it? And you always knew, there'd be something because of the, how we always go 2 steps forward and 1 step back, because markets are not just straight up. There's a series of higher highs and higher lows. And then what happened? Trump got elected, and this kind of mania, hysteria took over that for a period of about 3 weeks, Trump was going to spark a strong economy, and so that was going to bring inflation, and that meant the bond market sold off, and interest rates spiked, and then the dollar took off, and then Trump wanted to be in Bitcoin, and so Bitcoin took off and at the expense of people selling gold and buying Bitcoin, it seemed. And so all these things kind of came together. Well, those kind of things could come together again. I'm not optimistic that all of the monetary, I say fiscal policy changes that people think Trump is going to be able to make with Musk and Ramaswamy. I'm not optimistic that those are going to happen, but maybe they do. And maybe the deficit spending starts to come down, and maybe inflation returns and the Fed pauses their rate cuts and the bond market sells off, and all of a sudden the dollar index moves up through 108 and 110 and goes back to the highs of 2023 up near 114. I mean, there are a number of things like that could happen that could derail us temporarily. But there are a lot of long-term secular trends that are in favor that were reinforced over the weekend with China. Gold is being bought on the dip. The data out of London showing vaults being drained somewhat in November on the dip. A lot of those things stay in place. And so there's always going to be volatility. There's always going to be risk in the short term that any speculative trade you put on could get underwater. But I do think, month over month, quarter over quarter, we're probably still in pretty good shape.
Well, Craig, you brought up the greenback, the U.S. dollar. That's a big lever for the commodity sector, a big lever for a monetary metal like gold. There's also interest rates that tie into what happens in the currency. So when you look at the levers of interest rates, what we're seeing on the 10 and the 2-year yield, but also what's happening in the dollar, what is your general outlook as we go into 2025?
It's funny that there's been quite a rally in the bond market over the last couple of weeks that has kind of slipped past people. The yield on the 10-year note's down about 30 basis points, trimming that change that came in after Trump. And so we're going to have to watch the bond market real closely because, again, there's this assumption that took hold that rates were going higher under Trump. Well, I'll remind everybody, it's only 8 years ago that we've just been through this. In the period after Trump got elected in 2016 the dollar rallied and interest rates went up because people thought, Trump's going to do this and that. Well, in the end, Trump's a businessman who built his empire off debt. And he has stated he wants lower interest rates, not higher interest rates. And so it may turn out to work out a little differently than what people are expecting. And if we get into a softening economy next year, like I continue to expect, maybe the Fed will be cutting rates on the short end. Maybe the bond market will be rallying and we get lower rates on the long end too. And again, that would be an environment that would be positive, on a large scale for precious metal prices. But man, it's been a heck of a year. You think back to last year at this time, we had what looked to be a false breakout above $2,000 an ounce on that very first weekend of December. And everybody, oh boy, here we go, going back to 1,200 now, that sort of thing. If I'd have told you guys or anybody listening to us that here 1 year later, we'd be talking about $2,700 gold and $32 silver, I think we all would have raised a hand and said, okay, that's good for me, I'll take it. And yet that's where we are. So if anything, as we wrap up the year, we should take stock of what's been some pretty solid gains and then just see if we can't add to them as early as January, which is seasonally a very strong time of the year too.
Hey, I completely agree with you, Craig. It has been a good year for precious metals. And as much as we hear companies and investors complaining about it, fact of the matter is, it's been a good year. You should have made money this year. There were a number of stocks that did well. And even if you're just simply in gold holding, well, you did well as well. So let's see what next year brings, because if it's anything like this year, it should be another good year, whether people want to admit it or not. Craig, thank you as always for your time. Again, Craig Hemke, founder and editor of TF Metals Report. We'll post a link in the show notes. Craig, thanks as always for your time, man. Have a good week.
You bet, guys. We'll talk to you next week.